All right, what's up, guys? It's Khalil back with another US30 analysis and price predictions video. Today is May 9th, and let's start this off by quickly recapping what we saw occur last week. So, as you guys know, I mentioned, start off the week, it was very low volume as we ranged between 33,000 and 33,300 in anticipation for the FOMC news and rate hike coming out, which ended up being a 50 basis point rate hike, as well as a pretty neutral statement from Powell, giving us that bullish move all the way to 34K, which, as we now know, is a previous price sensitivity level. And this simply was a short lived squeeze for investors to liquidate positions at this level, at this key level that's been helping us maintain bearish structure. Right after that occurred, we completely corrected that move and made our way back down to end the week at 32,500. Okay, so this is my predictions as to where price should go. So as we dig deeper, as we dig lower into the key demand zone of 32K, if we see any exhaustion occur here, it's likely we'll see price react, hopefully break above 32,600, and then continue up to 33K. And as market psychology would suggest, here I'll show you this. Let me zoom out a bit. Okay, so as market psychology would suggest, as we come back to this previous price sensitivity level and key demand zone of 32K 400, 32K 200, in between that range, as price begins to enter here and we start seeing that exhaustion, market psychology would tell us that stock market investors are likely going to begin buying up this dip, then hence giving us that push up to 33K before coming back down to retest 32. And for sells being valid, we'd need to see a break below 32,000 to continue below. Or from here, what could also be an option, one second. So also from this level, what we could just see is for price to just come back up to retest. Sorry, one sec. So yeah, what we could see is for price to just come back up, reject this 32,200, 32,400 level, come back up to retest 32,600, and make our way back down to 32K. And like I said again, for continued sells, we need to see a break of this key price sensitivity level for us to continue lower. Um, to support this bias on higher time frames, we are still very bearish. Sorry, which I'll show you in a second. So we are still very bearish on higher time frames, as the market is still in a corrective phase from the all-time highs. We could potentially see price come back down to retest the pre-pandemic levels in prices. So this would be 29,500. But as you guys can see, from that all-time high price point, we are getting continued lower highs and continued lower lows, where price is coming down, retesting, cap bounce back up to retest the previous highs, another break below, price pushing back up to retest the top of the bearish downtrend, and right now we are back to come down to retest 32K flat. What we do want to see from here, which you can is evident on higher time frames, is either a break below, back down, then a push back up, or for price to reject this level, push back up to the previous highs, and then for us to come back down to pre-pandemic price levels before we can look for buys back up to all-time highs. So I will be updating this. This analysis towards the end of the week. Thank you guys for watching. Make sure you like, comment, and subscribe. And peace. Trade smart.